Welcome to Pip Insight. Monday the 13th of July, New York pre-open. This session we have analyzed 8 Forex pairs and selected the 7 with the clearest technical picture, 3 showing bullish structure and 4 showing bearish structure. Every chart shows support and resistance zones and moving average alignment so you can see the technical picture at a glance. Let's get into it. Here is today's New York pre-open chart analysis. Pairs showing bullish structure, dollar yen, dollar Swiss, Kiwi dollar. Pairs showing bearish structure, gold dollar, euro dollar, pound dollar, dollar Canada. Full chart breakdown for each pair coming up now. Remember, this is educational content only, not financial advice. If you're here for the gold breakdown, let's get straight into it, because there's a lot to unpack this morning. Gold is sitting at $4,067 heading into the New York Open, and the structure here is clearly bearish across the higher timeframes. Both the 4-hour and 1-hour charts are printing a clean downtrend, lower highs, lower closes, and price trading well beneath the key moving averages stacked up around $4,099 through $4,108. That overhead cluster is acting as a dynamic ceiling, and sellers have been defending it aggressively. The 4-hour RSI is approaching oversold territory near 29, which tells us momentum has been brutal to the downside, but it also flags the potential for some consolidation or a technical pause before any continuation. On the downside, the $4,050 to $4,057 zone is the immediate floor. A clean break below that opens the door toward the $4,032 area from last week. To the upside, the $4,089 to $4,102 zone is the key resistance cluster. That's where the Sunday gap open and recent rejection activity converge. On the fundamental side, today's calendar is relatively light for gold. We have Fed members Bowman and Waller speaking, and while both are rated low impact, any dollar-supportive commentary around rates staying higher could add selling pressure to gold given that inverse relationship. Watch for $1,057 on the downside and $4,089 to $4,102 on the upside. Those are your defining levels into this session. Euro dollar. The chart is showing tentative bearish structure on this session. The moving averages are fanning below price. Resistance is marked between 1.1 for 5 and 1.1 for 6. Support is marked between 1.1388 and 1.1402. Here is the full chart breakdown. Pound dollar. The chart is showing tentative bearish structure on this session. The 4-hour trend is to the downside. Resistance is marked between 1.3412 and 1.3425. Support is marked between 1.3365 and 1.3375. Here is the full chart breakdown. Dollar yen. The chart is showing tentative bullish structure on this session. The moving averages are fanning above price. Resistance is marked between 162.3 and 162.42. Support is marked between 161.82 and 161.96. Here is the full chart breakdown. Dollar Swiss. The chart is showing bullish structure on this session. The 4-hour trend is to the upside and the 1-hour is also pointing higher. Resistance is marked between 0.8108 and 0.812. Support is marked between 0.8074 and 0.8087. Here is the full chart breakdown. Kiwi dollar. The chart is showing bullish structure on this session. The 4-hour trend is to the upside and the 1-hour is also pointing higher. Resistance is marked between 0.5792 and 0.5795. Support is marked between 0.5758 and 0.5762. Here is the full chart breakdown. Dollar Canada. The chart is showing bearish structure on this session. The 4-hour trend is to the downside and the 1-hour is also pointing lower. Resistance is marked between 1.416 and 1.4175. Support is marked between 1.4118 and 1.413. Here is the full chart breakdown. That is the New York pre-open analysis from Pip Insight. We covered 8 pairs this session, bringing you the ones with the clearest chart structure. All content is educational only and is not financial advice. If you found this useful, please like and subscribe. We publish 3 times every weekday: London, New York, and the Asian session. Follow us on X at Forex Insight for updates. See you next time.